This daily market update has been brought to you by Daily Wealth Report. Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is of the nature of general information only and must not in any way be construed or relied upon as legal, financial or personal advice. Good morning traders and investors, it's Monday the 23rd of July and we've seen the markets coming off on Friday in Europe and the US, and that's going to have an influence on the Australian markets for Monday morning. We can see the FTSE 100 up in front of us here. It was down 62 points on Friday, closing down 1% at 5651. A nice strong solid red candle there, forming a short-term pivot point and keeping the market in this relatively sideways range that has occurred over the last 3 to 4 weeks. The German DAX also saw the selling pressure kicking in. It was down 128 points or 1.9%, almost twice as much selling pressure there, but then the DAX had outperformed the UK FTSE through the previous week. It closed at 6,630. The French CAC 40, a very similar situation here, a big strong downwards day. It was down 2.1%, that's 69 points, closing at 3193, and that's now formed a double top scenario here. So if we see it breaking down below 3130, down around this level here, then we have a strong bearish reversal pattern forming. As we look at the US markets, the Dow Jones was down 120 points, or 0.9% on Friday, closing at 12,822, and we've got a little bit of selling pressure here in the pre-market activity ahead of tonight's opening bell. That just confirms the doji candlestick that had occurred on Thursday, which represents uncertainty between buyers and sellers. The Nasdaq index in the US, representing technology stocks, was down 40 points or 1.37%, so outperforming the blue chip stocks. It was closing at 2,925. Again, a short-term bearish reversal point, forming at the previous high. Whilst we have higher lows here, equal highs, we're in a very slow range that's just bouncing between these two levels at the time being. The S&P 500 index had also closed down. It was down 13 points or 1%, closing at 1,362 points. The VIX index ended up closing up 82 points based on the fact that the markets were falling. It had gained 5.3%. Whilst it's a solid red candle that had formed, it closed higher than the previous day's close. That closed at $16.27. It's still in this downward shift through here based on the fact that the markets are mildly trending upwards. It is, however, at its long-term lows, and this is something for us to be aware of, that down at these low levels here we usually define bullish market activity. So if we see any signs that the markets are weakening, this VIX is going to start shooting up and has a reasonable potential to get to around about 20 points quite easily. Closer to home, the ASX 200 index, we saw that closing down 10 points on Friday, so just a mild day, closing at 4196, and we have the SPY pointing to a 21 point lower open today, so that is going to have an influence on the ASX 200. We can see again, whilst we are forming higher lows and higher highs, we're not trending upwards with any strong momentum at all, so there's a high probability here that we'll get a short-term retracement. Now if that can continue to form high lows and higher highs, then we'll continue to see this trending upwards. But as we've seen for the last month and a half, nearly 2 months, every time we have 3 or 4, even 5 days upwards, we then get profit taking kicking back into the markets. And so if this pattern is continuing, that's what we should be expecting over the coming week. Okay, well that's our update for Monday the 23rd of July. We look forward to giving you an update again tomorrow.